Greetings. Welcome to my weekend market recap, 2nd April 2022. I am Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I may mention about options trading from time to time. You may refer to the characteristics and risks of standardized options document from Options Clearing Corporation to decide if option trading is suitable for you. I use the Q trading systems running on Metastock as the primary trading software. Q has multiple components. Most of them run on Metastock and Zenith data. I also use Q Elite running on TradeStation, which I use as my brokerage platform in the USA market. That was the last slide. Let's continue with the live system. First, a look at the global markets. Australian index, all ordinaries. In the weekly, it is going up, bullish. In the daily, it is already up significant distance from the recent swing low. We are not going to buy now. On Thursday, there was a bearish headwind possible reversal signal. However, there was no headwind short setup because the weekly did not meet the checklist requirements for the headwind short setup. On Friday, we have a bearish indecision at the top. It is already too high to take a long trade. If price comes down from here after displaying the bearish headwind and bearish indecision, I may look for shorting opportunities. Looking at the weekly, it may not give a shorting opportunity on all ordinaries index itself. However, you may drill down into the underlying stocks to find weak fundamental stocks in weak industries and look for low risk short setups there. Japan's Topix index. Okay, I had some difficulty loading the Topix index, that's fine. Let's continue with the China market, CSI 300. China market dropped sharply in this area, then displayed a bullish indecision at the bottom. Next candle came down but did not come close to the low of the candle that had bullish indecision. And this week we have a bull release signal, and after many weeks the backdrop candle color turned neutral yellow. In the daily, on this day it created a false downside breakout at the watermark support level, which was created by the bullish indecision. Then price created a higher low, displayed the bull release again. That candle also displayed bullish flow, and on Friday we have another bullish candle with bullish flow. It has trend line support nearby. Therefore, if we take a long trade now and we are proven wrong, we can be stopped out with a very narrow stop loss. This is the time I would like to look for buying opportunities in the China market. I don't like to trade the index itself. I may instead drill down into the constituent stocks using Q index and look for strong fundamental stocks in strong industries to buy. See the difference between Australian market and China market. Australian market is at a recent high and I am looking for shorting opportunities, and China market is at a recent low and I am looking for buying opportunities. That is how I am always looking to follow the market where it is going or appear to be going, not where it is now. In a down market, I am looking for buy setups. In an up market, I am looking for short setups. In an up market, I may look for trend following long setups also, but not in case of Australia's all ordinaries because it is already far above the recent swing low. What about UK's FTSE index? FTSE index is also at a recent swing high, far above recent swing low. At the low, it displayed bullish indecision again and bull release, at which point it had created a false downside breakout at the watermark support, and it went up after hitting jump and thrust low, overextended condition to the downside. When you combine all these signals, you can anticipate a turnaround very well and start to buy right from this time or this time. Probably in individual stocks, not in the index itself. Now it is at a high price level, and what we see is something opposite to what we saw at the bottom. It has series of bearish indecision, then a bear release. If price comes down from here, similar to the Australian market, I look to short weak fundamental stocks in weak industries. And India's Nifty 50, India's Nifty 50 also recovered from the recent swing low, at which point it displayed the bullish indecision, then a bull release after hitting jump thrust low. On Thursday, it displayed a bearish headwind. However, there was no short setup for several reasons. One was the trend line support was just below the price. Another reason was that the weekly did not meet the checklist conditions of the headwind short setup. Next day, Friday, price touched the trend line support and sharply went up. It also created a bullish reversal candle on Friday. So price went below Thursday's low and closed well above Thursday's high. That is a reversal candle that is shown in the band indicator as well. Nifty 50 is looking quite bullish, and this is different from what we saw in the Australian market and UK market. Both of those markets were also at swing high. However, I mentioned that I may rather look for shorting opportunities there. That is different in case of India's Nifty 50. It's at a swing high, but we have a strongly bullish reversal candle right at trendline support on Friday. That's why I am willing to look for buy setups in the India market. And in fact, I shared a trading idea a few days ago on the Graduates Club. Let me look at the stock, and you will see how the exact same principles that I apply in the USA market can be applied in global markets. Not only India, but China, Hong Kong, UK, Australia, all markets. This stock is Tata Communications, TATA.NS. You may read the ticker symbol from the top. See the principles that I used. It is the same as I used while reading the market indices. Tata Comms hit jump and thrust low. It displayed bullish indecision at the bottom, bullish headwind, bull release. It moved in an extremely narrow range. It was inside a Q squeeze. Then on Thursday, it sharply went up. I identified the stock as a squeeze breakout candidate on Thursday using real-time analysis, and I bought the stock somewhere in the lower half of Thursday's candle, and by Friday I have already significant profit. In fact, by Friday's high I had covered the risk distance in the trend. Tata Comms has great fundamentals also, funds are accumulating. Those are dimensions that I try to align with all my trades in whichever country I am trading. India market had several other very nice looking buy setups on Friday. Now let's look at the global market as a whole using the global index. Again, it hit jump and thrust low, at which point it displayed bullish indecision and bull release, and then price sharply recovered. Here also, like the India market, we see a bearish headwind on Thursday. However, there was no short possibility because trendline support was very close. On Friday, price jumped higher right from the trendline support. So global market is at a swing high, but on Friday it jumped from trendline support, so it is looking bullish. Now let's look at the USA market. Once again, the same analysis I am applying to USA market. this time using QQQ. It hit jump thrust low, displayed the bull release, at which point it created a false downside breakout. Price sharply went up from there. If you followed me on my Twitter or on my website, all are public forums, you would notice that at this point I was buying. In fact, in the month of March, when many people found it difficult to trade profitably, I showed in the last Metastock webinar that 88% of the trades that I shared publicly before knowing the results hit profit target in the month of March. I was able to buy right at the low using the useful Q signals. When price went to the swing high, other people started becoming bullish, and I mentioned publicly that it was already near the upper boundary, far away from swing low. I was reluctant to buy. I might have bought some dividend paying stocks, but those can be held for longer term. For swing trading, there were not lucrative buying opportunities. And see the chronology of comments I made. Right from Wednesday, when it displayed a bear release signal on QQQ, I had also studied the market breadth using Q Elite real-time charts, and I shared the possibility of a market drop. That was before the market turned severely down on Wednesday, Thursday, and Friday in the morning half. At the very top, just as I tweeted about my bearish view, I could take some short trades, and in this case I use naked put options for most of the trades. As I mention always, I try to avoid trading naked options with one exception, or rather two exceptions. One is to short the put when I am willing to buy a stock and hold it for the longer term if need be. Then I am willing to short the put in a stock that is at a low price but has strong fundamentals. That I did for PayPal, which I shared publicly once again, and that hit the profit target easily. On Friday, I traded another stock with short put. If I have time, I'll explain how and why I traded that. The other situation where I use naked options is when price is at a high level, therefore implied volatility is low, options are cheap. I buy naked put sometimes. Though time decay goes against me, the increase in volatility is in my favor. So they nullify each other. And in fact, the increase in volatility tends to benefit a lot more than the price decay that comes from time decay. Because I am always buying about 1 month to 45 days to expiry options. So using that concept, I shorted several market ETFs and some mega cap stocks using naked put options starting from Wednesday, right from the day when I tweeted about my bearish view. And I booked profit in all of those short trades by Friday. In the USA Graduates Club live chat, I mentioned exactly when I closed all my short positions and I started to look for buy setups. Why did I look for buy setups? That was also based on market internal analysis using Q Edge and also using Q Elite market breadth, the snapshots I had shared in the Graduates Club chat. As of Friday's close, I have only long positions held in the USA market. If I clear the drawings, let's review again. I was buying at the bottom, stopped buying at the top, shorted at the top, covered them by Friday, and on Friday I took some long positions. That's how I think I'm able to catch the market direction a little bit more accurately than many other traders. And the secret is because I'm not just looking at the market ETFs or futures or indices, those are useful but still external views only. I'm also looking at internal health of the market using Q Global Market Breadth and also Q Edge Sector Industry Stock Breadth and Q Finder Technical Breadth. Now see the QQQ. I have bought some stocks on Friday, not in QQQ, but some fundamentally strong stocks. If market was to go down, then it will take out Friday's low very easily, and I will get stopped out with a narrow stop loss. That is a constant in all my trades. They are all low risk opportunities. Now QQQ is not the strongest of the market ETFs. We can see here, if you can read it here, or you may see it on your own Q charts, the relative performance is tilting down. Even on Friday it tilted down. Therefore, though we have a bullish looking candle with long lower tail on Friday, relatively it is weaker. So large cap, mega cap, tech stocks are weaker. I am not going to buy them. What about SPY? I will also analyze which of the market ETFs are strongest, and that will lead to a conclusion of what kind of stocks I am looking to buy. Large cap, mega cap tech stocks that I just commented based on QQQ analysis, I will avoid them. QQQ itself has neutral candle in color in daily. Weekly candle shape is bearish. So I am going to avoid buying QQQ. Now let's look at the other market ETF. It's an useful exercise. You will see how I am reading the different market ETF charts to conclude what kind of stocks I am going to buy. And I will later try to reinforce that from market internal health studies. This is SPY. Once again, the weekly candle shape is bearish. Daily candle shape is bullish but neutral in color. So when I look at weekly daily both, I am not going to buy SPY as well. So large caps I may avoid. Let's look at DIA, industrial CTF. Once again, the weekly candle shape is bearish, and in this case, daily candle color is red, worse than SPY and QQQ, which were yellow. So, of course, I am not going to buy DIA. Q guidelines say not to buy on a red candle unless there is a bounce long setup, but we don't have a bounce long setup here. So, on red candle, I am not going to buy. Though I am expecting price to go up from here, DIA itself is not an instrument to buy, neither are QQQ and SPY. So industrial stocks, I am not favoring. IWM, now this is looking better. This is the only market ETF where the daily candle is bullish in shape, neutral in color but bullish in shape. The weekly is not bearish, but it is indecisive. It has both upper and lower tails, and it has a hollow body. So both weekly and daily are better than the other market ETFs. Relative performance tilting up, showing that currently it is outperforming the market. And you may not be able to see it clearly on this chart unless maybe I magnify it. Okay, that's good enough magnification. Now you see how all the direction lines, the magenta, yellow, cyan, blue. All of them came together and they are holding. Price went up right from all of them. Some people call it fanning out. When price is supported by all the direction lines at the same time, in a manner of speaking, you may say short term, medium term, long term, very long term, all traders are willing to buy now because all the direction lines are supporting the price, and Friday was the first day price went up from there, creating a higher low. We already had a higher high. So we have higher high, higher low. IWM in the daily chart is in an uptrend. Friday was the optimal day to start buying small cap stocks. So after the look at the market ETFs, my conclusion is I am going to prefer buying small cap stocks. Now let's see if that is corroborated by market internal health studies. The very useful market breadth total view internal health study that is created from two composites for major indices. Let's first focus on the small cap versus large cap cyan color line. Earlier it was tilting down, but now at the right edge it is tilting up. So small cap is doing better than large cap. That is a reason to buy small cap over large cap. I prefer small caps for that reason. This is an internal health study that is confirming the view that I arrived at from the market ETF studies. Now this line is showing small cap versus large cap. What about mega caps? Let's have a look at the mega caps using the mega cap custom index. See the difference between IWM and mega cap custom index in Q market breadth. IWM is creating fan out, creating higher high, higher low, going up at the optimal point to buy. Whereas mega caps are already high significantly from the swing low. The optimal point to buy was here when it created multiple false downside breakouts and went up after creating bullish flow. At the top it has displayed bearish indecision, then bear release. Friday's candle shape is indecisive, color is indecisive. So I am not going to buy mega cap which is far away from recent swing low. IWM was very different. So from market breadth total view, my conclusion was to buy small cap rather than large cap, and from mega cap top 20 custom index, my view is to avoid mega cap. So I am left with small cap stocks. That is what I would like to buy. Now let's look at the other signals from the market breadth total view. Growth versus value. Growth versus value was going up in this area. However, at the right edge, it is starting to flatten off. Doesn't have lower high, lower low yet, but it has flattened off. When it is flat, there is no preference between growth and value. So you may look for small cap growth or small cap value. On Monday, if you see the magenta line is tilting down, then you will prefer value. If you see magenta line tilting up, you will prefer growth. If it continues to remain flat, you can buy either. Currently, based on the two studies, small cap versus large cap and growth versus value, my conclusion is buy small cap, and it is okay to look for either value or growth, or even better if you find undervalued stocks with high growth. Even better if you can find undervalued stocks with both earnings and revenue growth, and those stocks I call diamond fundamental stocks, and one of those I bought on Friday. I think I shared it on my website. If I have time, I'll review that stock again. Now let's look at the accumulation distribution counts on the candle chart. What is the candle chart? The candle chart is a custom index created from the constituent indices. It's not one market future or index, it's a custom index, composite index. I call total view index. It reflects the true picture of the USA market. If you remember, when at the bottom it displayed Phoenix and then bingo, I mentioned that you may look for exhaustion, bearish exhaustion. Then we had accumulation count 2, accumulation count 4, at which point also the candle color turned cyan. That was a eureka day or turnaround day. And once again, this is where I was buying. At the top, it had once again accumulation count 2, 1, 2 again. And then one eureka signal at the swing high. I carried out the master classes recently. Some more are still to be conducted. And I explained that when eureka or high accumulation count, they come at a swing low. That is the optimal time to buy. If eureka or high accumulation count at swing high comes, then we may be cautious that it may be a bullish exuberance. After that, price came down little bit, and on this day we had a Phoenix signal. Eureka, Phoenix, these signals are thanks to Ian Woodward, may him rest in peace. So when I noticed the Phoenix signal, I was cautious. However, I noticed the distribution count was only 1. That was not significant. And that distribution count came from Dow Jones Industrial Average Index. That is the smallest of the market indices. So though a Phoenix came, the distribution count of only 1 and from Dow Jones told me that it was not so weak as normally a Phoenix would indicate. So I shorted some stocks and market ETF on Wednesday, one day before the Phoenix came, and then I started to book profit on Friday. As I mentioned, I booked profit here on all my short positions. If we look at the 3-month new high low, it is in the upper half. So it is bullish, but it is not at the extreme upper band, so it is not overbought. So that is also telling that it is bullish but not overbought. If we look at the percentage of stocks above 50-day moving average, the yellow line, it is still going up with higher high, higher low. It came down little bit from the peak, but it is still having higher high, higher low, and on Friday it tilted up again. So that is also telling me to be bullish. The marketplace total view is telling to be bullish once again and bullish on small cap stocks. Between Nasdaq and NYSE, which one is stronger? And this we are seeing for many months. This is Nasdaq internal health and NYSE internal health. The percentage of stocks above 50 MA for Nasdaq, it crossed just above the 50% midpoint level. And this yellow line also is having higher high, higher low. That is telling us to be bullish. And NYSE is also having higher high, higher low, and the yellow line is at 60% level. So NYSE continues to be about 10% stronger than Nasdaq. So the analysis of market breadth from Q Global is telling us to buy now. What is the conclusion from QH sector industry stock advanced decline breadth? Using QH, I am looking at sector industry stock advanced decline breadth from 1 month to 1 day. Let's review what I explained in the previous market recap. At that time, all these periods were green from month 1 to 1 day, and I mentioned that that was approaching overbought condition. I would like to short, but for shorting I would need the real time or 1 day period to turn red. That was what I explained in the previous weekend market recap. And indeed, in the middle of the week, the 1 day period, real time period turned red and I shorted. You can see that weakness now in the middle of the week in 5 day and 2 day period. So all the periods were bullish. At that time I was looking for some weakness. That weakness came and I shorted. And then on Friday it turned bullish again. So I closed my short positions, and Q Global Market Breadth was also telling me to buy, so I bought some stocks. That is how I am using the real-time breadth from different angles, from market internals as well from sector, industry, stock, advanced decline breadth. So it's again time to be bullish from this perspective. Is it overbought? That answer comes from the bucket analysis. The green bars are bigger than the red bars, so that is bullish. And we can also see from the pie chart that 68% of S&P 1500 stocks are above the mid Bollinger Band. So that is bullish. Is it overbought? For that, the uppermost bucket will be around 30-40% level. But currently it is only at 9% level. That is bullish but not overbought. On Friday, which sectors went up? 9 sectors went up. Which ones went down? Let's look at that. Only 2 went down. One is technology, one is consumer discretionary. When I looked at QQQ, remember I mentioned based on a study of QQQ that I was going to avoid technology stocks, and now from sector analysis I am arriving at the same conclusion: avoid technology stocks. On the other hand, healthcare as a sector, if you are using QH regularly or following my tweets and YouTube videos, healthcare was weak for a long time. On Friday, it became the second best performer. Energy was the best performer. The second position had a tie between consumer staples and healthcare, both of which went up by 1.9%. Now, energy is going up because of the Ukraine conflict. The second best performer, the two sectors, are both defensive sectors: consumer staples, healthcare. The next two best performing sectors are utilities and real estate. Both of them once again went up by a same percentage level, 1.6, and they are utilities, real estate. Once again they are defensive sectors. So Friday went up. I'm thinking of buying. I'm thinking of buying small cap stocks. And what kind of sectors? The conclusion is to buy defensive sectors in utilities, real estate, healthcare, consumer staples. Avoid information technology, avoid consumer discretionary. Now, energy is strong. Energy had been strong for a while. We can see that from the sector rotation table. Energy comes to the top, the best performing sector, not only on Friday, it is the strongest sector for many periods. Here we can see sector rotation from 12 month to 1 month, and then more frequently in recent periods 10 days, 5 days, 2 days, 1 day, and during market hours even the real time sector rotation will show up. So energy is strongest. It is strong already for a long time. The best buying opportunities were earlier. Whereas look at healthcare. It was weak for a long time. Then the score color started to improve, and on Friday it became the second strongest sector. And another useful information comes from the pace columns, which shows acceleration deceleration. On Friday, healthcare is the most accelerating sector. So you could look to buy healthcare stocks, some of which would be small cap stocks as well. So we know now what to target for buying: small cap and probably healthcare stocks. Healthcare is the second strongest and just turning around. I love turnaround candidates. We saw real estate, utilities, and consumer staples. Those were also relatively stronger, but the moment you look at the sector rotation scorecard here, you know that the best buying opportunities are from healthcare now as turnaround candidates. Before drilling into stocks, let's look at the market from technical breadth using Q Finder. Q Finder shows the technical breadth, a balance between bulls and bears. This is the weekly period. The weekly period, all signals is still bearish. Strength signals slightly bullish, but reversals a lot more bearish, and the absolute number of reversals are much more than gaps in the bullish direction. So in this case, strength slightly bullish, reversal much more bearish. Together they are actually bearish. Trend continuation is also bearish. So all signals, weekly period is still bearish. What about daily? That is Friday's signal. That is showing bullish picture. All signals 71% strongly bullish. Strength signal also majority bullish. Trend continuation majority bullish. Reversal also majority bullish. So on Friday we see that we could look to buy. Weekly period is weak, daily is strong. That is in sync with what we saw from sector, industry, stock breadth using QH. So Friday would be the optimal day to start to look for buy candidates. What kind of signals you could look for? We can see that flow signals are more than 10% bullish signals. 11.5% of all stocks in this trading universe gave bullish flow. That is a trend following signal, which is what we saw from IWM chart. Higher high, higher low went up from all the direction lines fanning out. That is in sync with the trend following flow setup. Long direction, we could look for bullish flow by candidates. Technical breadth is also telling us to buy. Let's see one stock that I shared publicly on Friday, and this is my website saganandi.com. I regularly share live trading ideas always before knowing the results. That is key, and it is a public forum. Everybody has access. There is no fee at present. Anybody can access them and see how I am analyzing the trades and confidently sharing them. That is true testament, powerful testament to the principles that I am following, also the systems and workflows I am using. I shared an idea on Friday. That was this. I shared it at 1:28 p.m. Eastern Standard Time. At that time, the market was still looking weak. And I mentioned in the topic, on a weekday, this diamond stock is about to break from a Q triangle and Q squeeze. Now see the consistency in applying Q trading principles. When a stock is breaking out from a triangle pattern, in this case it was a narrow triangle pattern, the stop loss should be very narrow. That's a constant in all my trades. It was going out or about to go out from a Q squeeze. It was inside a squeeze. As of the time I shared it, it didn't break out from the squeeze yet, but I anticipated that if it broke out of the triangle, the squeeze breakout would follow sooner or later. So it was in a squeeze. Why that was important? Because it was in a squeeze, price was in a narrow range for a long time. Once it broke out in either direction, and in this case I expected the breakout to be on the upper side, it may move significant distance, giving me an attractive reward risk ratio. So I looked at this pattern. I shared the idea in anticipation of a breakout, and I shared the Q 360 degrees analysis snapshots, and see how I'm using all the dimensions to align more and more edges in favor of my trade. Healthcare was the strongest sector in terms of acceleration. It was the second strongest in terms of score. Biotech is in healthcare sector. See the industry rotation scorecard for biotech. It was weak for a long time. Then it started to improve, became among the top 20% industries on Friday, and this I am seeing in real time, became one of the top 20% accelerating industries on Friday. So that was the perfect time using top-down analysis, market looking bullish for small cap stocks, healthcare sector strong, accelerating most. Then look at biotech, also top 20% in strength and acceleration. So it would be logical to look for strong fundamental biotech stocks, and I found this one, BioNTech, BN BioNTech, BNTX is the ticker symbol. Let's read the fundamental scorecard. Value stock with high earnings growth, with high revenue growth. Remember when I studied the Q global market breadth, the value versus growth line was flat, and I mentioned we could buy both value or growth, but if I get a stock that is not or but both value and growth, and not only earnings growth, also revenue growth, diamond candidate, that's even better. It has robust earnings quality and a short squeeze potential. I will show you on the technical chart after this that we had a technical squeeze, and in terms of fundamentals also it had a high short interest, that is a short squeeze potential. So both in terms of technicals and fundamentals, I was expecting a squeeze release. As of the time I shared the idea, 77% of PR stocks in biotech industry were up, that is significantly up. The stock itself was up by more than 3%. Analysts are bullish. So fundamentals allowed me to buy the stock. And then I shared the technicals. In the weekly, we had a big move up 3, significant bullish momentum after this long drop in the stock. Just prior to this big move up 3 bullish momentum, we had many indecision candles. Then we had a bullish indecision at the bottom, trend line resistance here. This red line trend line is gapped up above that but came down. That was actually earnings result. So gapped up, came down. Where did it stop? It stopped right at the trend line support. And on Friday, it opened lower, and then as of the time I shared it, it was about to go above the trendline resistance, creating a breakout long trade setup from a squeeze. The squeeze is shown from the lower band here. So it was in a Q squeeze. It created a reversal candle at price extreme low, and that was the first time you could buy this stock after creating higher high, higher low. The first buying opportunity. Prior to that, if you look to the left, you could not buy because it did not give a higher high, higher low. You could not buy using trend following setup. You could buy using box setup at double bottom at this point. So that was a double bottom buy position, and on Friday I was expecting a trend following come breakout buy setup. So I shared it publicly before knowing the result, and Q guideline has two approaches. One is to see the confirmed signals at the close and buy. The other is to use intraday charts to buy in anticipation. So I bought in anticipation and I used short put. I was willing to hold the stock longer term if need be, because the sector was just turning around, industry was just turning around. It has great fundamentals, and I was buying the first possible long breakout setup. So I initiated a position. Let's see how the stock closed. Biotech, if I expand the chart, you can see at the close, the candle color turned bullish, and in fact, it had a possible flow long setup as well. Now everything is falling together, isn't it? When I looked at technical breadth, I saw about 11% of my trading universe get bullish flow, and I mentioned that's a category you may look to buy, and biotech came in that category. From sector industry rotation, I wanted to buy healthcare and biotech stocks. Biotech came in that category, and it is giving a low risk buy point. It also hit jump thrust low and then going up from there. If you wanted to look at the squeeze using squeeze chart, let's do that. I have set up everything on the custom menu bar. You can see the squeeze very clearly from the Q squeeze signal in the volatility template. When a stock comes out of a volatility squeeze, it may move significant distance to the upside in this case. That was also favoring a long trade in Biotech. So I bought this stock. Now it is important to also see how I found the stock. I'll come to that workflow, but before that I would like to show you another stock that Ellis shared in Graduates Club. He's doing quite well in terms of identifying and sharing ideas, and I asked him how he identified the candidate he shared, Q, and he mentioned top-down analysis. So let's carry out the top-down analysis exactly as he did. And thanks to Ellis for sharing that. Let's start the top-down analysis. We start that from Q edge. Go to the home that is telling us to buy. Go to the sectors that I did already. Let's go through the steps again. Look at the strongest sectors. Healthcare is an attractive buy sector because it is also a turnaround candidate. Let's drill down into the industries in healthcare. Top-down analysis. Sort by Friday's performance. Biotech come to the top. However, I like to highlight the top 20% industries in terms of strength and also in terms of acceleration. So I'm left with these industries. See how smoothly, easily, and intuitively I am navigating between different dimensions. No fiddling around, no fumbling. It's just the thought that I have in mind in terms of top-down analysis. I'm executing that smoothly without thinking about it. So these are the strongest industries in healthcare. Let's drill down into the stocks from S&P 1500. That's what he did, Ellis did. And we saw value stocks are preferred or growth stocks, or we could look for both. So let's look for 3-star. Those are value, growth, both. And which one comes to the top? QURE. Let's look at this stock. The fundamental scorecard. QURE, undervalued stock known from the valuation color, high earnings growth, and in fact high revenue growth as well. So it's not only a 3-star, it's a diamond fundamental stock. Robust earnings quality and a short squeeze potential. See the striking similarity between QURE and the stock that I shared, Biotech. Both are in the same biotech sector, both are undervalued, high earnings growth, high revenue growth, high earnings quality, short squeeze potential. Now QURE went up by a higher percentage, 7.6%. So this is what he carried out, and then what he did, he could have opened the chart using Q Global, but he didn't do that. I'll carry out the exact steps he did. So what he did, he probably took all the stocks, let's say the stocks that went up by at least 2%, and I will use Q Elite now. He used Q Elite, went to Finder and dropped the stocks in Q Finder looking for trade setups, and QURE also gave a breakout long setup. You can see from the top row here. We change the color, white color. Breakout setup in QURE. And then he looked at the chart. Once again, see the similarity. This stock in the daily created in this area lower low, and then here it created higher low right on this candle. However, that time price was just below trendline resistance. Q guideline is never to buy in front of a resistance. This trendline resistance are very effective, so you would not buy on the day it created higher low. We would wait, and Friday was the first day one could buy using a breakout setup. This is QURE, And remember, for Biotech that I shared also had a striking similarity. Biotech also had the first buying opportunity as a breakout setup. So QURE, L is identified as a top-down approach. Now what I showed you is drill down from QH sector industry to S&P 1500 stocks. I think that's what L is carried out. What if I didn't want to drill down to S&P 1500 stocks but my own liquid stock universe? Where is that liquid stock universe? It is in Q Vital. I have this 1,132 liquid mid-price stocks. That is my usual trading universe. So I have calculated a scorecard for that here already. If I wanted to drill down into biotech stocks from this list, I could do that. If I go to QH, I have these industries I am interested in. Now instead of drilling down into the same application, that is QH, which is S&P 1500 stocks, I could drill down into external application Q Vital for my own trading universe. So let's do that. Drill down into my trading universe. Okay, let's refresh the data first. Okay, maybe the link is disconnected for some reason. I'll have to check. I'm using a new computer for this, but let's not do that today. I carried out actually a drill down into my own trading universe and I found several buying ideas. Now that's one thing, but how did I find Biotech? Let me explain that. In my trading universe, I have a list of liquid optionable stocks. It has 360 stocks. Let's see if my Q Vital is responding properly. Sometimes I like to trade options, especially when I'm looking to short the put. Then I need liquid optionable stocks. So I start with this list in that situation when I want to short the put or maybe buy the put at a very high price level. So I carried out a scorecard analysis of my liquid optionable stocks. It's retrieving data. Give it a few seconds. It will complete the analysis and I'll try to show how I found Biotech. I showed how Alice found QURE using a top-down analysis, and now I am showing how I found Biotech using fundamental first analysis. Okay, I think my connection is getting lost. Q Vital is not responding, not able to retrieve data from Refinitiv. So I'll not be able to show you, but let me explain. I carried out a fundamental scorecard analysis of my stocks. I looked at the scorecard. I hit the diamond button to look at the strongest stocks. Biotech was one of them. Then I hit the lookup industry scorecard from QH button, found the strongest industries. Biotech was one of them, came back to the same stock list to look for stocks in the strongest industries, and we already had selected Diamond Fundamentals. Biotech was right near the top. That's how I found the stock Biotech. As you can see, my Vital is not able to get response from Refinitiv, so I'm not able to show that. But that is the fundamental first approach that I followed. Before ending, let me mention one more thing. I tweeted about the list of stocks that have very high bullish and bearish seasonality in the month of April. I tweeted about this. You can see the number of stocks having strong bullish seasonality, and I focused on stocks with at least 80% of seasonality. Bullish side I found 76. These are all liquid stocks. Bearish side only 4. That is also telling me that in April I may look to buy. And if you look at this long list of 76 stocks, you will find some candidates that are at a very low price level and inside a narrow range. Let me end by showing two of those stocks. One I think is SEM. I'll not do the complete analysis. You may carry out the complete 360 degrees analysis, but see the similarity in my approach. It hit jump and thrust low, overextend to the downside, up move is likely, several bull release, bullish indecision, bullish headwind, then price gradually started to move up and trend line support started forming. All along this downtrend there was no trend line support, only trend line resistance. Now it started creating trend line support, however it has this trend line resistance. On Friday it has a bullish flow. Once again we saw large bullish flow candidates from QFinder. It is right below the trend line resistance. If it can break out of that trend line resistance, it may give a very low risk buy opportunity. That is SEM, Select Medical Holding. And another stock with high bullish seasonality is SGMS, Scientific Games. See the similarity. Hit jump and thrust low, bullish headwind, bull release, has a watermark support, several attempt to go down but recover immediately, creating multiple false downside breakouts, shaking out weak hands. And now it has created a trend line support, bullish flow on Friday. If price goes up, can break out above this watermark resistance, then it will move up from this very narrow range, allowing us to buy with very narrow stop loss. This also has 80% plus bullish seasonality in April. You may look at this stock as well. Q Vital is not responding. I think Refinitiv is not responding. That's fine. I showed you several buying candidates, and more importantly than that, I showed you the exact techniques, be it seasonality first or fundamental first or top-down approach that you could follow to identify those trading opportunities in 100% real time, and you could carry them out in any market, this approach and technique using Q systems. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next public session, which will be in the coming weekend market recap. Have a great weekend. Keep safe, and no reason not to do that, as these live examples show. Trade profitably. Thank you.